Welcome back to Mid-Cap Radar. Well, as promised, Prudent Corporate Advisory Services is the next management on the show. The company reported a 4% decline in revenue despite growth in AUM as yield compression weighs in on the performance. The PAT rose over 26%, but the entire growth comes in from 21 crore of other income. To discuss the quarter and the road ahead, we are joined by Sanjay Shah, Chairman and Managing Director of Prudent Corporate Advisory Services. Well, Mr. Shah, thank you so much for joining us. The first thing, is how we started off. There is pressure as far as yields are concerned, but the street actually was fearing a lot more. So which are the product categories where you are facing pressure on yields, and going forward, where can it be restricted to?
So I think the yield has been coming under pressure because of the regulatory changes which has came in the month of April by the SEBI. So I think there is nothing like a category. It's the entire equity basket which has been revised as far as your TR is concerned. So if you look at in the month of April, entire structure has moved from TR to BER, and there was some exit load of 5 basis points which was available to the AMC, which has been removed by the SEBI. And because of that, if you look at my average yield, normally used to hover around 91.2 basis point, has now came down to about 88.4 basis point. So there is a reduction of 2.8 basis point in my entire book. So you say that my total revenue has gone down by 4%. However, we also have a significant portion of revenue comes from insurance, and insurance is a very cyclical business. So if I tell you my mutual fund AUM has gone up by 4%, my mutual fund revenue has gone up by 2%. While the insurance business revenue was down by almost 35% because of the seasonality of always Jan, Feb, March is significantly better in the insurance. That's the reason. Otherwise, I think if you look at on a YOY basis, we have done significantly better. So if you look at on a YOY basis, my top line has gone up by 18.3% and my operating margin has improved by almost 32.4%. So I think that is a real way you should look at as far as my business numbers are concerned.
Okay, so Mr. Shah, you're saying that YOY is a good way to look at the business. But if we talk about yields again, because it was because of a regulatory change, are these yields stabilizing at these levels now for FY27? What kind of numbers are you looking at across the board? What kind of growth targets do you have? Plus, will yields stabilize at these levels, the 88% mark that you spoke about?
Yeah, so I think by and large, I believe the major regulatory change which SEBI brought last year, which has been implemented from 1st of April, I believe that I don't see any further change, at least for the foreseeable future, as far as regulatory linked changes are concerned. However, as you are aware that the entire TR structure is such where incrementally for every 5,000 crores, few basis point TR goes down. So if you see significant mark-to-market gain on the portfolio going forward, marginal change might come, but we have been giving the guidance that 88 basis point might remain static for at least for the foreseeable future as far as mutual fund business is concerned.
Okay, so you're saying that as far as yields are concerned, you're expecting it to be stable going forward for the rest of FY27. Is that accurate, sir?
Perfect.
Okay. Now, you briefly alluded to the insurance business. Going forward, what is the kind of growth that you're seeing over there? What kind of premium can you generate? And what will be the, ideal top line mix for you, on both of the businesses?
So I think insurance is the business which I think probably we feel that it has a significant scope for it to grow in our system. If you look at last year, on a YOY basis, our life insurance premium collection has gone up by almost about 78%, and my the general insurance business premium collection has gone up by 37%. We are very, very positive as far as your health insurance part is concerned, and we have been taking a strong target, and we believe that our book should grow significantly. So I think in a full year basis, I think we assume that my health insurance premium and the entire book should go by 40-45%. And life insurance, we started selling the Tulip and Ulip since last year, and which has been helping us a lot as far as my entire premium booking is concerned. And there also we are foreseeing the significant premium collection. However, when it comes to a revenue, I think everybody is looking for what regulator will do now as far as the entire the cost structure is concerned and the payout to the distributor is concerned. So I think awaiting that, if you assume the steadiness in the revenue stream, we should do much better than the mutual fund.
So 40 to 45%. Yes, go ahead.
So on the mutual fund front, I can tell you one important data point, because mutual fund you earn on the based on the average AUM. So on the last year we earn on 1,19,000 crore of average AUM, and when I'm talking, my AUM is almost about 1,40,000 crore. So we are positive by 17-18%, and last quarter we earn only 4%. But my forward thing looks, because assuming that market remain in this static mode, then I think my top line on the mutual fund also should be much healthier.
When you say much healthier, do you have a number the way you gave it to us for your health insurance growth?
Health insurance, I
minimum how much of a growth do you see in the mutual fund business? Let's put it that way. In AUM growth, 4% sequentially now, what kind of growth do you expect? I know markets can be volatile, but still, if there is a number that you do have in mind internally.
I think mutual fund, I have a positive thing related to my SIP book, because we have almost 1,240 crore of SIP currently, and we command 3.8% of the market. So that's something which gives me a very, I think, steady state net sales expectation. So my belief is that on a full year basis, conservatively, my mutual fund revenue on a top line should go up by more than 20%. On the insurance, conservatively, I can say that it has to at least go up by 30% without assuming any regulatory changes.
Okay, thank you so much for joining us, giving us your view on the quarter gone by, as well as the outlook for the rest of FY27. Well, we now slip into a short break.